In this video, I'm going to show you exactly what I send to the members. 3 trades, 1 that I put on, 2 that I absolutely, put on, and then the 3rd one I want to put on this week. If you're a member, you get all of these. You saw that I put on the 2 trades, and you will see the 1 that I put on next week. When you're a member, you see all the selling premium trades. Writing covered calls, selling cash secure puts. I then buy dividend paying funds. They see it all. Being a member gives you a chance to see a successful, active trader that does this in retirement. This is what I do for my retirement. So if you want to be a part of it, you see the screen in the description. Get it. Be a part of it. Sign up. Would love to welcome you aboard. Now stick around. There's going to be 3 trade ideas that I sent to the members. 2 of them I did. 1 of them I'm going to do. But this is what we do. When you watch this video, this is what the members get. Are you getting this from a Discord? You're not. You're just not. Because what we do at the membership here is you follow my trades, you see my trades, you have all the tools so you can keep all of your trade information in front of you, plus all those exclusive videos for the members only. Things you don't see here on YouTube. I want you to join me. I give you a 1 free month offer. Sign up. Absolutely would love to welcome you aboard. Get ready. 3 trades that we're going to do. Stick around. I know you're going to like this one. One free month offer in the description below. Would love to welcome you aboard. Hey, welcome back everyone. I want to talk about 3 stocks that I'm watching right now. SMCI is a stock that I believe has moved higher and is going to stay in its trading range. The last time SMCI really had some good news, the stock gapped higher, and ever since then it's been trading in this range. Now we use SMCX as its 2x leveraged ETF. Because if I'm going to assume the risk of SMCI, and I understand SMCI, I get it. Why not get a little juice? We're going to use the 2x leveraged ETF to most all of the trades we do if they have a 2x leverage ETF. Like I told you, volatility does not equal risk. I know I'm investing in SMCI. I know what they do. So if I'm going to put money in SMCI, then I have no problems putting money in its 2x leverage ETF. Now, here is the deal. This stock has rallied considerably way back in May when they had some great news that they signed a $20 billion deal in Saudi Arabia. If we move back, we also get good news where they filed their reports and the NASDAQ got off of their back because they met some regulatory issues and the stock moved considerably higher. Then it peeled back like most things did during the crash. Basically found some nice trading ranges. Obviously, we didn't get involved because, here we are trying to tread water just like everybody else, just trying to battle back. Well, now, since then, a lot of things have happened. Stock market goes higher. We feel richer. We're able to get out of positions for which we were down. And we're feeling better about trading this market. Now, we're looking to trade SMCX because it's trading in this incredible range. Once the gap happened and it moved higher, usually if a gap is going to backfill, this would have happened probably during this peel back here, right? You get this incredible rally higher to 51 for SMCX, and you're thinking, hey, Wall Street's going to take profits. They don't trust this company. Why would they trust this company who has let them down time over time in the recent years? Well, those times are behind them, and Wall Street now sees that SMCI might be an opportunity to get some value. They are a profitable company, and they are in the AI space, for which, if you're going to have AI servers, you need AI cooling, and that's what they provide. And in fact, they provide a mobile rack system, much different than VRT, which VRT uses buildings and larger infrastructure. So there's a lot of good news at SMCI. You just have to get past the fact that they had reports that they cooked their books and they didn't file the reports and all those negative things. It really looks like they've moved beyond that. Remember, they are the #1 vendor for NVIDIA, and none of that changed during this time. So NVIDIA had their back the whole time, and that's very important. It would have been very easy for NVIDIA to ditch them and move on to someone else, but they didn't, and here we are. SMCI is going to move higher, just when, we're not sure. We're just looking for a 30-day trade. We can use the 2x leverage with SMCX. This trade that I'm about to present you, I just did, and it will bring me 7.2% for 30 days. Now, it's very important to pick a good strike price because we're going to use a cash secure put and we're going to be out of the money. We're going to be some $7.76 out of the money because we're going to pick the 35 strike. Now, why did I pick the 35 strike? It's because that is your near-term support, and it's when the stock powers higher, and it has never gone below that since May 14th. And May, June, July hasn't gone below 35. Not to say it couldn't. We got the July 9th tariffs coming up. But even then, when we had the tariff news, this thing found a nice little trading bottom. So what we're going to do is this. We are going to use that 35 strike, and we're going to set up 2 trades. Trade number 1, we write the cash secure put. Did 10 contracts, going to make about $1,200. That's going to be 7.2%. Then we run the numbers for an at-the-money 35 covered call. If I'm assigned the shares on the day, July 18th, we can get off a 35 30-day covered call, making $5.90. This trade would produce another 14+% on top of the 7%. So this is what we like. We like to use great companies, right? High-tech company, SMCI, they got a great product. There's no denying it. The problem with SMCI has to do with management. Looks like they fixed that. They fired the CFO. We're moving forward. SMCI itself might find itself back to near all-time highs by the end of the year. But we're looking for the next 30 days, and we're going to do a very conservative out-of-the-money strike 35. Why we picked the 35 strike is because once it rallies, it never backfills, and it backfills only to that point right there. So Wall Street believes this is fair value, and this would be undervalue. So there's your number. That's what you should be seeing in the charts. You should not be getting involved up in here because what could happen is you could be bag holding, and this could fall back down to the lower band of the Keltner channel. But you can see this is pretty strong right here. So we're going to go with that 35 strike. And the 35 strike would put us out here somewhere. And I just see this moving just like this. So that's trade number 1, SMCX. Now the next trade we're going to talk about is Apple. And again, we're going to use the 2x leverage ETF for Apple. Check this out. This is an incredible trading range for Apple. If I brought up the Apple chart, it looked just like this. But Apple's trading for $195. We would rather use the $20 AAPU ETF, and it's a 2x leverage ETF to Apple, so we get the juice for the covered calls or the cash secure puts. Look at this trading range. This thing will bounce off of 20 4 times. Now again, this is our market crash rally. Look at the support. See the support right here? And it's recently trading at that support. That's why I did the 21 cash secure put that I may or may not be assigned today. Because if I'm assigned the shares at 21, we can get off a 30-day covered call at the money 21 and make over 6%. That was the plan. If you go back to the write-up for this trade, if I'm assigned the shares at 21, that's what we'll do. When I did that 21 trade, the stock was up here. And my theory was, if it pulled back, it's going to pull back to 21. Check this out. Stock market closes in a few hours. It's literally trading at 21. And there's a chance it could trade above it. So I may buy this back, actually take the obligation off the board and do another one. We just do another one. We keep grinding. We do this and do this and do this until we're assigned the shares. Then we're going to do the covered call. I presented a covered call in this trade too. You got your cash secure put and your second covered call if I'm assigned the shares. And a $21 at the money covered call would render about 6% as well. These leveraged ETFs to these companies can provide that little extra juice. And I don't have to put up that much capital. I do 1,000 shares for Apple. I got to put up a lot of money. It's $195. But I can do 1,000 share trade on AAPU, which is Apple. Remember, AAPU is Apple. It just fluctuates a little bit more. It's a 2x leverage. This trade is money. If I could put on another cash secure put at 20, I would. And in fact, I might. But dealing with the current trade, I'll be assigned the shares at 21 unless this gets above 21 and the entire premium for my last trade goes to zero. Then, of course, we'll just start fresh. But look at that trading range. Right now, you should be considering something with Apple. Even if it's buying the shares and writing an out-of-the-money covered call, trying to collect some of that movement, or an at-the-money cash secure put, or something like I would do with it trading at 21, maybe use that 20 strike. Look at that. That is your 20 strike. This thing has bounced off of 20. And again, if we go and look at the Apple chart, you're going to see it does the same thing in and around 195. Right now it's trading for 198. This is an incredible, pretty conservative trade if you ask me. Now I'm going to throw in a little bonus here. A lot of people have been talking about this Circle Internet group. Now you have to understand cryptocurrency to understand what this thing is. And it got some incredible news that this company might create a stable coin for the U.S. government. So of course this thing is rocketing. This thing went off at 31 bucks. It's now trading for 242. Now they might create that stable coin. And hell, I don't even know. I'm not even doing research on it because there is no way I'm getting involved in this thing. There are, as you walk in the door owning this thing, there are Wall Street bag holders literally giving you their bag. Because going from 31, this is literally when it opens up at 31, this thing rockets to 242. You don't think you're going to get stuck holding this bag? Well, good luck to you. And if you make money on this, I tip my hat to you. My gosh, you have some nads if you're messing with this. Now, you can look at Coinbase, and Coinbase is ripping higher. Boy, I'll tell you, that is a gap that's going to get filled. But hey, if you're a Coinbase holder, man, I tip my hat to you because you are absolutely feeling what I believe is really short-term gains. I believe the reason Coinbase is ripping higher is because Coinbase will probably be the middleman for the stable coin for the U.S. government. And that's what they did when they ripped higher when everyone found out that they were going to be the middleman with Bitcoin. Remember back when it came out that all these ETFs were going to be able to use Bitcoin? Well, it was Coinbase that was going to be the exchange they use. And look what happens. It actually rallies. And then it comes all the way back because what people realize is that Coinbase is just an exchange. They just take a little bit off of the top, which is great. That's a great business. Take a little bit off the top of every transaction. Hey, that's a good business if you can get it. But are you making a profit off of Bitcoin's rip from 50 grand to 112? You're not, because you don't own Bitcoin. And the same's going to happen here. They're not going to own the stable coin, and they're just going to be the middleman, and they're going to take off a little bit. Now, I could be totally wrong because I haven't done any research. I am 100% guessing that's what's happening here. Because why would Coinbase be ripping higher over 40 plus points when Bitcoin is basically flat for the day? Keep an eye on that. I believe that gap that you see right here is going to backfill, and these bag holders are going to be sucking wind as it backfills down to potentially 260. Get ready for that one. Final trade I'm going to show you right here. DPST. You know, we can do LABU right here. LABU has found a little bit of a bottom. We could trade that bottom all day, but I have about 3 trades on that. Let's talk about the one that absolutely caught me off guard. I haven't been watching DPST lately. Check this out. This thing is at 75, and it could be trading between 75 and 85 or 75 and 65. You can buy the shares and you can write out of the money $10 strikes and collect like 3 to 4 to 5%. DPST being the 3x leverage ETF to the 50 regional banks. Love DPST, and look at this trading range. This is incredible. I didn't even notice this the other day. In fact, on that red candle, I looked at it that night and said, gosh, I got to do a video. Didn't do it. I got tied up, and look what happens. That's how quick these things move. Got to catch them fast. But let's take a look at the Keltner channel, because what we have here is a great sandbox. Now, we can take off the edges, the upper and the bottom edges here. So the way I would look at this trade is your Keltner channel mid could be the top line, or that 80 strike is. let's go with 80. Stock's trading at 75. We know that 80 being the top, and if it's moving towards the top, well, then you can get an out-of-the-money covered call. The 80 strike makes some good money. You could do a 75 at-the-money strike or cash secure put or covered call because I believe this thing would pull back to 71. If you don't have your shares taken away or you are assigned the shares because you got involved at 75, if you dial up a 75 covered call when the stock's trading at 71, which is near-term support, you can make like $4 easy. And of course, that's going to be a decent 2-week or 3-week trade. You don't even have to do 3 weeks on that. Leveraged ETFs give us that juice when we sell premium. So that would be my next trade. If I had the cash, I would get involved with DPST first because it's a 3x leveraged ETF to a sector, the sector being the very conservative 50 biggest regional banks. Always want to stay diversified first. Well, that second trade would easily be the Apple trade because look, Apple is not going away. It's going to fluctuate and it's going to have times where it trades in ranges, but they always come back to Apple. Apple has an ecosystem that is damn near bigger than most all the companies combined. It is a beast. And if you just invest in this and sell premium, you would get rich just off of Apple. Now, with that said, I love that. I would go with that. That's one of those companies where I will assume single stock risk. Many people say, I thought you were getting away from single stocks. I did, but I put an asterisk saying, look, we're not going to pick these single stocks that are literally crap. We're going to pick the best. And the best would be Microsoft, Apple. We could even say Google. We could say Facebook. I haven't used those lately, but we could use them. They're behemoths. And even if they fall, Wall Street comes back to them because they are profitable to the tune of billions of dollars. Nvidia's there as well, although that has had an incredible run. I believe it'll be pulling back. SMCI, I mentioned SMCI. You know my story. I'm in it, and I'm in it to win it. I was going to sell SMCI and just take the hit. I believe the stock, with all of the news, is now going to move higher. All that bad news is behind them, and they're going to move higher. So we use SMCI and SMCX because I'm in that bad trade. And until I'm out of that bad trade, we're going to use them as the situations are set up. And this looks to be a nice setup, and that's what we did. So, hey, look, I hope you enjoyed this video. I hope you take all of this information and try to do your own due diligence and let me know which one you thought about doing. And if you did it, let me know. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.